Welcome to the May 25th, 2020 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowanGroup, and your financial weatherman with your weekly fast-paced tour of the global financial markets, the top headlines, and investment strategy for the crisis of 2020. Where do we go from here? Well, let's cover exactly where we are in several different markets, then we'll get to strategy. So Dow Jones Industrial Average, we've been covering the year-to-date, the implosion of 38%, the recovery and anticipation right here. What do we see here? Well, that's more of a range bound. Last week we corrected with Dr. Grouchy Fauci and Fed Chair Powell, who had a cold, giving us rather dire, uninspiring glimpses of the future, if you will. And we're range bound. I would think this is a sell right about here. It probably takes until 2023 to see a new high on the major indexes like the Dow. And we would be buyers down here of equity. So sell equity, buy equity. That's our current range for adding equity or subtracting it out of the portfolio. I'm going to give you a few other areas of emphasis as we go forward. Now, this is healthcare. We added the medical dividend companies, the individual companies, but this is what happened to the healthcare index, a low of about 73, currently just about 100. And that's reasonably where they started. One premise here is the medical industry, those that have solutions, especially antiviral and even healthcare solutions, those actually, and the providers, they actually may experience permanent higher revenue for virus preparedness and, of course, the search for the vaccine, as they call it, Project Warp Speed, I believe. Anyway, so that's one sector that's interesting, and the medical dividends you can reinvest as you go. If we look at what's happened year to date with oil, well, for those of us in Texas, it was a historic oil month. Okay, see this dip right here? Last week I told you the story of Bank of China oil certificates, and our fictional characters, Hang Yu, apparently waited to roll his contract till the last day. China can't take delivery of West Texas Intermediate crude, so boom, minus 37.63 a barrel. And this week's, the contract week finished at about $34. That was contract expiration. And that's a 1 month, $70 a barrel increase in the price of oil. Never happened, probably never happen again, but it is notable. And we're back to a more normal, this is about what a break even at the wellhead is. And you're starting to see, by the way, China, big news this week, their demand is nearly fully restored from where it was last year before the pandemic. So demand's starting to fill back in with the reopening. More on that in a second. The high yield index, this is what happened to a basket of bonds. 88% of par. Par's 100, that's where a bond or loan matures. We're about to get to an important lesson on that, by the way, and how this pandemic may be the opportunity for forward double-digit income with substantial gains. So, par, 100, 88 back there before the pandemic, then we hit a low of 68. You're about to see what happened in the crisis of 08-09 and some great opportunities when you can buy big baskets of good loans and bonds that are well managed at a discount. This is a short-term high-yield index. It's about 80% of par. If you have a 5% default rate, that would imply 95, about a 20% gain opportunity for short-term domestic high yield, bigger opportunities and bigger yields, and more price volatility in other spaces in the high yield category. This is high yield all the way back to the crisis. We were above par. Yes, sometimes bonds trade above the loan because people like cash flow. Well, down here, 62% of par value. That implies a 38% default rate. In the Depression, it was 20%. Great Recession, it was 10%, which would imply about 90. So that was obviously oversold. It recovered fast. That's how we, one of the tools we used to recover clients to record profits in less than 12 months. But more importantly, you want to come out of a crisis with record forward income, because that's the best measure, net present value of future cash flow. If you apply a normal cap rate, you've ended up with a nice capital gain, even factoring in a slightly higher default rate as we go forward. Now, we've already heard about Jcpenney, Neiman's. Those are not the B space. This is B. A space would be treasuries down. Then you have the B space, which is normal corporate lending. C space is distressed. And we are seeing distressed companies that were, especially those that were on the edge, more bankruptcies there. It will affect the B space probably from a 2% default rate to something around a 5. Gives us a 95 target on this index. You can see the implosion right here. Boom. Well, we went to 2008, 2009 levels very quickly. We've recovered, and the Federal Reserve has come to the table to stave off defaults and provide liquidity with a $6 trillion balance sheet as opposed to 4 where it was. It was $1 trillion back there, and of course that was too little liquidity in retrospect for a $20 trillion economy, or soon to be. Now, here's the strategy, one global high yield, one domestic high yield. This is pre-crisis 2007. You can see the price risk right here. The accumulation, the ability to reinvest dividends was a powerful tool, and most people pay their bills. That's the lesson here. You're not dependent on the Dow getting back to 29,000 just to get to record profits. No, look at this. 5 years later, the Dow's recovered. It took all the way into 2012. But what happened to high yield if you just reinvested your dividends? You could live on the cash flow or reinvest it. If you reinvested, global high yield had a 14% average return during that period. The power of compounding and getting paid double digits from the discounts. Now look at domestic high yield. Average return, 9.98%. We'll call it just under 10% as an average return. And the Dow here just gets back to even, but here investors in this category navigated the crisis. Those of you that know SMU Stadium, Gerald J. Ford, he's the banker. He went in and bought big discount real estate loans and bonds in the Resolution Trust Corporation. He bought them up at pennies on the dollar, 50 cents, 30 cents, depending on the basket. He either got paid par, which is nice gain plus interest, or he got the real estate in foreclosure. And that was one of the greatest investment stories, using baskets of loans and bonds that would end up outperforming equity with more certainty. That's part of the lesson. The other category, we showed you West Texas Intermediate crude back to a more normal depressed level of, say, 34 a barrel, 32. This is the history all the way back to 2005 of the pipelines and oil. You can see oil at 145 pre-crisis 2008, or as the crisis unfolded. Then you see the decline to about 40 a barrel. The pipeline index moves in sympathy, but those tollways, the oil and gas pipelines, are still there. So you can see that recovery, an amazing new high on what the pipelines were worth. Oil at 27. Here, oil hits minus 37, and the pipelines went with it briefly, and now the recovery underway. Many of the pipelines could be undervalued by as much as a potential triple from here. We'll wait and see. Those companies appear to be in reasonably good shape. They paid down a lot of debt beforehand, obviously not without price risk. But if oil ever approaches 80 or 90 a barrel, there are opportunities there, especially owning the infrastructure with reliable income along the way. I'm Spencer McGowan, President, McGowanGroup. Come see us. Yes, the office is reopened June, July. We've gotten very good at Zoom meetings and go-to-meetings and even just phone appointments for planning sessions. Go to networthradio.com, fill out the preliminary client questionnaire. We look forward to serving you and helping you prevail in crisis. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.